Less than a year after investing $100 million in Blinkit for a 9.3% stake, Zomato is reportedly in talks to merge with the online grocery company in an all-stock deal. Blinkit shareholders will get a 10% stake in Zomato. A Business Standard report said that Blinkit would be valued at around $750 to $800 million, which is much lower than the unicorn status it had achieved last August with the funding round where Zomato participated. Blinkit is going through a severe cash crunch, bringing the unsustainability of the quick commerce model into focus even as competition is increasing in this space. This has prompted Zomato to extend a $150 million loan to Blinkit to support its capital requirements in the near term. The loan amount is in line with Zomato's stated intent of investing up to $400 million in quick commerce in India over the next 2 years. Formerly called Grofers, the startup rebranded into Blinkit in December as it pivoted to 10-minute grocery delivery, entering the quick commerce segment. So, what is behind Zomato's plan to acquire Blinkit?
Swiggy has Instamart in-house, and they have gained a lot of traction on this over the last few quarters. Zomato was wanting to have something like this, and this industry in itself, which is quick commerce, is expected to reach $5 billion over the next 2 to 3 years. Plus, we have also seen the companies like Dunzo, which is backed by Reliance, and Zepto taking a part of the market share in the quick commerce. Plus, we have also seen Zomato wanting to experiment with 10 minutes food delivery in order to go ahead in the game. Blinkit also has access to a lot of rider base and sourcing for grocery. And Zomato believes that grocery is going to be a big source for revenue generation over the next few years. So this gives in that synergy to Zomato to be able to first deliver food and get more riders, get access to sourcing for grocery. So this also gives Zomato access to pump in additional funds to Blinkit, which was difficult considering current market situation and high cash burn and churn in employment that Blinkit is going through. They have done a lot of cash burn by getting into the space, by trying to experiment with 10 minutes delivery. Zomato, in order to keep this ambition alive, wanted to get access to be able to put in extra money into Blinkit.
Zomato has become a strategic investor in the hyperlocal e-commerce segment and has picked up stakes in smaller startups. While Zomato says its core food-related businesses that include food delivery, dining out and B2B supplies unit Hyperpure will remain its key focus, it wants to invest in building the ecosystem around the food delivery business so that the cost of running a better food delivery business goes down with time. In the past year, it has made cash investments worth $225 million in Blinkit, Shiprocket, and MagicPin towards its objective of building out quick e-commerce in India. However, Zomato is still a loss-making company. While its average order value has increased over the last 3 years to Rs 400, in Zomato's own words, the food delivery business is only showing early signs of maturity. Its contribution margin as a percentage of the gross order value is 1.1%, although this is an improvement from negative 15% in 2019. Zomato estimates that a 5% contribution margin in its food delivery business at the current scale can ensure break-even at the EBITDA level. Moreover, Zomato will continue to fund the growth in its core food businesses till they become profitable.
One is that existing shareholders face a dilution of around 10% in the existing shareholding. And plus, there's a huge difference between a listed company which has a mix of retail and institutional investors, plus versus a expectation of a PE-backed startup, which has an exit period of 5 to 7 years for the PE. So we will witness prolonged volatility in the stock of Zomato going forward, as the growth will be uncertain, the competition will intensify, and cash burn will be inevitable for the company in the short run. There will be further commitments from Zomato into these type of startups to be there in the game, as we have seen the competition intensifying and moving towards quick commerce. We'll see more commitments from Zomato coming towards startups, and most of these startups are loss making. The growth coming from these startups because of the competition will be uncertain, and this will ensure a lot of volatility for the existing shareholders of Zomato.
Zomato has previously said it stands ready to infuse additional capital into the hyperlocal e-commerce companies in which it has taken minority interest and consolidate its stake, leading to a potential merger in the future. However, the quick time frame between Zomato's first investment in Blinkit and the potential merger has raised eyebrows. This could also mark the beginning of the consolidation in India's ultra-fast grocery delivery space.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.